Good morning, everyone.
Can you hear me?
Yeah, I'm good.
Good morning.
My audio coming through?
Yep, I got you. Good morning, everyone.
Cool. Good morning, good morning, good morning.
Abdul Franklin, Dad, Rupert, Sarah, Sean, Simone. Hello, hello. Aiden, hello. Heben, maybe? If I mispronounce your name, I'm sorry. I will get better. Hope everyone is doing well on Sunday. It's January 14th. Hopefully you guys are kicking it into gear in the new year.
How's everyone's week been?
Not too shabby. One day 7 of 75 hard, so close out this week, and I got 10 more weeks, 9 more weeks, something like that.
Aiden says eventful spend at testing the quarterly theory.
Cool.
Good stuff.
We'll give it 2 more minutes, and then we'll get into the call.
Well, it's been a pretty nice week of price action, actually, for early January. So got some exciting things to talk about here. Got some more folks joining us. Good morning, Kate.
Good morning.
Good morning.
Anyone got any fun plan for Sunday afternoon?
Working out, eating. It's been cold and rainy in Florida.
Same here. We had that weather front come through and cause a lot of flooding here. We have these greenways throughout the city, and it's like the drainage system or for stormwater, and there's probably about 5 or 6 feet of water flowing over all of them.
Jeez.
Crazy. Yeah. SEA. What's
Seattle.
that, Aiden?
Seattle.
Oh, Seattle. Okay. Cool. Nice.
I think
Seattle. All right.
I could be wrong. All righty.
Southeast Asia. Oh, wow.
Oh,
all right.
Southeast Asia. I was wrong. Wow. All righty.
Morning, Mauricio. Morning, Leslie.
Let's get into the news.
Great.
Hi,
John. Good morning.
All righty, everyone. We can go ahead and get started. News for this week. Just be aware that Monday is a bank holiday. It is a U.S. bank holiday. We have Martin Luther King Day, so banks will be closed. Usually low volatility there, so don't really pay too much attention to Mondays. Or not to Mondays, but to this upcoming Monday. Apologies about that. Tuesday, we have these WEF annual meetings, which are tentative all day. You have them Monday and Tuesday. 8:30, an Empire State Manufacturing Index. Really nothing more than that. Just note that this news is tentative though. So just because there's not a whole lot of news, you do have tentative news. So price could still kind of stay somewhat volatile throughout the day. Wednesday, again, and it looks like actually all week. I'm not even sure what this is. I'll have to look into this and I'll make a post on it. But you've got it tentative all week. So I'm curious to see what that might mean. Now, there's not a lot of times where you get a tentative the same tentative meeting every single day for the entire week. But Wednesday, you also have core retail sales month on month, regular retail sales month on month. That's pre-equities at 8:30. You also have an industrial production month on month at 9:15. Thursday, you have unemployment claims at 8:30, building permits in the Philly Fed Index at 8:30, and then Friday at 10, you have the prelim consumer sentiment with existing home sales and an inflation expectation coming out at 10. So kind of a weird, funky week with regards to news, something that to study. You know, you have these tentative, this WEF annual meeting that's tentative all day, every day this week. And then most of the news events that are coming in Tuesday, Wednesday, and Thursday are all 8:30. Nothing big, but still red folder. So there's not a whole lot of news, but there is news. So kind of just keep that in the back of your mind. You know, everything that's really red folder besides Friday is prior to 9:30 equities open. So just keep that on the radar, kind of understand what that might entail. But I'll look into what this WEF annual meetings are, and I'll kind of make a post on it later today because I'm not sure what that is. If anyone has any insight to it, I would love to know too. But other than that, that's it with regards to news. Kind of a funky week, but still there's news out there. Not a whole lot of news. And note that obviously because we have a big holiday on Monday, look for price to trade or fill certain objectives later in the week. So just keep that in mind. Other than that, that's it for news. I will jump into dollar. All right, so this past week, dollar has done nothing. It has not gone higher. It has not gone lower. Although ES and indices have been moving, dollar hasn't gone anywhere, which I'm okay with. In some instances, I am okay with and would actually prefer dollar not go anywhere and not necessarily give us a mixed market rather than it giving us a mixed market, because it's hard to trade in a mixed market when dollar's going in the same direction as indices. But when the indices are actually somewhat moving and dollar is not, that's okay. It's just consolidating. Nothing to change on the monthly here, right? We're looking with the idea that price could potentially pull back up into this monthly SIBI if it wanted to. As of right now, it's not giving a clear or strong reaction, but we have tapped into this multiple times into this monthly BISI. We have tapped into it and we have yet to have any closure in there. So just from rudimentary basics, right? Prices delivering from BISIs to SIBIs, imbalances, with the idea that we could deliver from this imbalance because it's already been mostly imbalanced or balanced back up into this SIBI and balance itself out. But we'll see. There's really not a whole lot more here on the monthly. On the weekly, a couple things to note. You can tell where did we close, right? This week's closure was 102.439. You can see the equilibrium from this high to this low is 102.43 or 102.439. That is algorithmic, right? You can't even see the candle closure because I have this here, but if I were to take this off, you would see that, right? Just a doji. If you also look to see the rejection block, you can see we made the high at, and I think that this is 768. The high of this week was 102.764. This comes in at 102.768, 769, which is the consequent encroachment of this weekly wick right here. So that's something to note. We didn't really go anywhere. The only thing I will also note on a weekly time frame is we did create a BISI. So now that we created a BISI, I would be curious to see how price wants to trade if we trade back up into here, right? Do we want to utilize something like that? That's something that I could be noting, right? And now that I have a BISI, I have a lot more solidity to what I can follow, right? Price could do this right here and use it as it's supposed to be used as a BISI and go higher, and or price could also start you know, if we get weekly closure below it, right, we could get something like this, right? Those are my two main focuses, right? If we want to go lower, we would use this as an inversion. If we want to go higher, we could eventually take out this high. I still am favoring this high. There's nothing on the daily, so I'll go to the daily, and also just don't forget that there is this SIBI right here. Right, there is still that SIBI there. This one's been fully filled, but I still think that buy side liquidity is in the scope in and around 103. My main focus is on this previous week's high. And if you look on the daily, you can see that we have not gone anywhere, right? Our main focus on the daily was really just this inverted SIBI, and then obviously to see if we could fill the rest of this, see if we could get candle closure through here. Last week, we did not do anything, right? We just straight consolidated. So what do? Well, it didn't go anywhere. It didn't invalidate anything. So really just the same thing applies, right? You know, we still are respecting this SIBI. We haven't quite reached back up into that this higher SIBI, but we've been using this still as inversion. If you look at the consequent encroachment of this long NFP wick, you can see we have not closed below this. So there's still reason for me to believe that we can go higher, and I still think we could go higher. We still have not taken that Friday's low, right? That's not CPI, that NFP low, right? And so we're talking about how even though it could possibly want to take that low, we would prefer it not to, and it still hasn't. So I'm still aiming for higher prices. It's to me, I still think that price aims higher, and I'm still just looking to see if, you know, if we can get above this consequent encroachment right here, right? We didn't last week, even though we tried to on Thursday. We still respected it, but we left a long wick, right? And although, you know, you can view longer wicks as rejection blocks, you also want to think about how retail sees them and how retail understands that as a lot of selling pressure. And when they see these long wicks, they think that that's pressure to the opposite direction. And to me, more so, that's liquidity, and I think that price could eventually find its way back up in here to fill the rest of this. So just with what's at hand, obviously I know from a higher time frame perspective, we are bearish, but we have cleared a lot of extension targets. We have come into a deeper discount. I know we do have sell side liquidity down here besides these lows, but I think that we want to kind of fill and balance out some stuff after taking some extended targets down here. So I'm still favoring the upside. And I could be wrong, but for the most part, really my main focus is to see if we can get back above here. Use this as liquidity, as internal liquidity between this price range. Take out that internal liquidity, and then if price wants to go lower, great. If not, we could start to reach for higher prices and imbalances up here. But for the most part, I am still kind of just looking to see if we can hold this area. I will go into a 4-hour just to see if there's anything here, but really there's not a whole lot to really focus on. You have an imbalance down here, but like I said, if we're looking to see if this low holds, you kind of have a liquidity void in here. And you can see how now price is kind of being sensitive with regards to candle closure. Price took some internal liquidity in here. You do have relative equal lows right here. So I wouldn't be surprised if price wants to do that, if it doesn't want to respect that. But there's really not a whole lot that I want to look at in here. I mean, look at it. It's just choppy. There's not a whole lot that it's given me. So if price wants to hold this low, odds are it's going to find its way up higher earlier in the week, not accounting Monday. And if for whatever reason it wants to take out this low, obviously we have imbalances down here that we could play to. You also could look to see, we do have a SIBI right here, and if you extend that across, you can see how now we've started to be a little bit more sensitive to the inversion of it. Same thing right here, right? Just looking to see these 4-hour SIBIs and how price is respecting with regards to closure. Looks like price is kind of pulling it out. So really, I would like to see if price can just start to make its way back up into there. Very choppy price action though. Not a whole lot going on. Nothing's really changed with regards to where and what I want to see out of price. And that's about it for me. Any questions on dollar before I give it over to Henry? I noticed closure below the tail of the 25% NFP, but no closure above the 25%. I noticed closure below the 25% of NFP, but no. Here, I think you're talking about this. Right here. So you're looking at, obviously, if I were to put 25% on, I guess it would be 75, the way I drew it. Yes, there's closure, but also look at the down closure, right? There's no down closure below it. It's just the way the price is opening up on these daily time frames. I wouldn't pay too much attention to the fact that you had this one up closure candle just open below it. To me, it's not. It's nothing really highly to take weight of consideration. I just like the fact that price is still, the 50% of it is the top half of this SIBI, and we've yet to have closure for it. So for the most part, I'd like to see price go higher. But I mean, good call out. Other than that, that's it for me.
All right. Going to indices. Screen sharing.
Yeah, you're good.
All right, cool. Okay, so we'll start on ES. Last Sunday, we talked about, we were coming off of this weekly candle here, where we closed inside the weekly BISI. And we were looking for what would occur early in the week to tell us whether price would work back from BISI back up toward the highs and buy side up here, or if it would continue down toward the monthly BISI below, which you can see here on a monthly chart between this candle's high and this candle's low. So remember, price is always just moving toward inefficiency or toward liquidity. And so we were looking for signs toward the beginning of the week as to what could happen to potentially tilt the hand toward which direction we would move in. And so looking at a weekly chart here, we can see that we started moving back up toward the buy side. And I'll kind of do a breakdown of what happened this week real quick, and then I'll touch on what the expectations are for next week. So you can see here, this was Friday, so closing the week right there, and then opening the week on Monday. Really nice move up on Monday. And you can see what's occurring on this candle here, right? On Monday, the first daily candle of the week, we're moving very nicely off the consequent encroachment of the weekly BISI. And we're starting to trade through premium arrays. So we're not respecting them and continuing to trade lower, we're trading through them. So every wick acts as an inefficiency treated by the algorithm, right? So here you can see we're trading straight through these wicks, getting closure through there, closure through here, closure through here. You could see this as potentially a breaker if your expectation was for price to go lower. So you wouldn't really want to see price trading and closing up through the mean threshold of this, which here you could mark out like that. And of course, Monday closing right through there. And then this here, these two lines, go back to the weekly chart a second, and you can see that that is an old BISI that we traded through right here to reach down to the BISI down here with the overlapping high right there. And so now you could expect, if price is going to continue lower, when we reach up to this area, you'd want to see it act as inversion and for price to trade back lower. But instead, on the daily, right away, you get closure up through the high end of that and see where Monday closes above that level. And I think it was on Tuesday here this past week where I said, as long as we don't get closure back below it, then the expectation is for price to trade up to the volume imbalance up here and then up toward the buy side. And you can see that Tuesday comes in, we do trade back lower, but notice where the candle closes. Still inside that old BISI. Wednesday, dropping just a little bit below on the open, but closing nicely right inside the volume imbalance right there. And then Thursday's action coming back in to trade inside some discount arrays. So inside the wick right here and coming back to test that area again, back up to the volume balance. And then on Friday, using the low end of that weekly BISI really nicely, just going one tick past it to book that low price and then coming back up into the range. So you can see how the candle bodies are all making their way higher, trading from discount arrays up to premium arrays up here. Oops. And so the expectation going forward is that we'll continue with what we're seeing on the weekly chart, which is working up toward liquidity above. And now if you drop down to, it's a bit clear on a daily, but even clearer on a 4-hour, you can see all the relative equal highs existing above price up here. So right here, right here, right here, right here. Retail sees all of this as a great place to put a buy stop order and get short, because look what's happening. It's coming up, it's coming down, it's going there again, it's dropping off. It's going there again, it's dropping off, it's going, dropping off. So this is seen as resistance by retail. So anyone getting short in here is putting a buy stop above these highs, creating liquidity for smart money, the big money players, to be entering long down here and then to sell their positions above these highs to anyone who's getting short. Because when they stop out, they're going to have to buy it back. And smart money here needs a willing buyer to sell their long positions to. So the expectation is for price to likely continue working up through the buy side, to and through this level up here. How we can kind of get to that just from a weekly chart is you see price traded down into the inefficiency down here and traded up through pretty much the only premium array that we could see in price would be this BISI here that we could expect to act as inversion. Now that this candle has closed right through it, we can expect that price is likely to continue up toward the buy side up here rather than coming all the way back down to the sell side before doing so. Remember, we do have this monthly BISI down here, so don't rule it out that price can come back down here. But when we're looking at a weekly chart, just given the proximity of how close price is to the buy side and all the relative equal highs that we saw up here, the likelihood is that price will trade through the buy side before making any sort of return back toward the higher time frame inefficiency. This is something that could occur later in the year, though, if we do get a downturn back in price. So just always remain aware of what inefficiencies exist below price if price is moving higher, or above if price is moving lower. Any questions here on ES? Take a look in the chat, or feel free to come on the mic if you have a question. One other thing I'll note too, which is a great way of seeing early on Monday what was potentially happening, is if you drop not just to the daily, but to the 4-hour chart, you can see what's occurring here on Monday. So when we start trading, getting into the New York session, so here's your 6 a.m. candle. So this will extend from 6 all the way to 10 a.m. since we're on a 4-hour. We're trading up, away, displacing away from this candle, so potentially creating a new BISI. Not until this candle closes is it officially created, but you can anticipate the formation of a BISI right here. Note also this candle is closing up through the midpoint of this wick here. And if you were looking at this SIBI here to be responsive, I'll make that red so you can see it clearer. Separation between this candle's low and this candle's high. You can see how we wicked past it here, but all the bodies are staying inside, dropping back off. And then when this candle closes, it's closing straight through there and potentially creating a new BISI. So that is immediately showing bullish order flow for price to continue working higher up into premium raise and liquidity. Right? So above this high, above here, into this inefficiency here, and then back into that weekly BISI, which is where price closes on Monday. Any last questions here on ES, or I'll jump to NASDAQ? Same idea really on NASDAQ. You can see a couple different things. Looks like we're all good. So I'll go to NASDAQ. All right, same idea here on the weekly, pretty much the same picture as ES, but NASDAQ came down a bit further than ES had originally in this retracement here. Traded through this BISI up here, down through the consequent encroachment. Remember, ES hit the consequent encroachment and then ran off of that. NASDAQ went through it to reach for what? The overlapping PD arrays. So if we're not going to stop here, we're not going to stop here. Instead, we're going to go all the way down to the overlapping beta rays, the BISI and the old high. And that's where we reach right there. Fall just short of the low end. You can see there's a small separation there still, where we didn't quite reach all the way to the low of the BISI. And then nicely working off of there on Monday. You can see here where we traded down to, there's a small volume imbalance there. Separation between that candle's close and that candle's open. You can see it right there. And know how the candle bodies are working nicely off of that. Coming down into those overlapping P rays. And then on Monday, racing off of there, trading and closing through this city here. And where does it go from there? This was mentioned on Sunday's call last Sunday. If we were going to work through here, if we're going to trade through this, then it's the same idea as we saw on the weekly chart. Right here, if we're going to trade through this, then we weren't just going to come into the BISI, we were going to go to the overlapping PD arrays, which is here inside the BISI. On the daily chart, it's the same idea. So if we're going to trade all the way through here, we're not just going to go to the low end of the BISI, we're going to go to the overlapping PD arrays. So here you see this old low in line with this city right there. So when we trade through this city, where does it go to? It goes to the overlapping there with the city here. It's it right there. Closing nicely inside the city there. And then you can see all these candle bodies continue to close inside the city. So that is showing more bullish order flow. We're not really getting any sort of rejection off of it. We are dropping back down into discount array using this weekly BISI after we trade out of it. But all the candle bodies are closing within this inefficiency and working higher, higher. And then you can see after we get the closure back above these two lines here, which is the weekly BISI, then note where the candle bodies continue to close. Dropping back down using the high end of the weekly BISI here, and then closing all the way back up here and reaching for that volume imbalance and the daily CIVI up here. So now all that's left is you can see we're kind of working back and forth, back and forth, back and forth between premium and discount arrays. And ultimately what we're seeing on the weekly chart is that we're getting closure back through here. So the only premium arrays left are the midpoint of this wick and buy side above here. So the expectation is that price will likely continue working up to the buy side up there. And if you go to a 4 hour, you see the same thing you saw in ES. Right? So relative equal highs here, 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 here. There's going to be buy stops resting above there from anyone who got short. And so price can work up through there and to the buy side up here so that anyone who is long can sell their positions up here to a willing buyer. Any questions here on NASDAQ?
Morning, herein. Yes. Once we take buy side, the what's the mode after that? Just go neutral and wait and see if we continue higher or if we get like a big displacement. And the second question is, can you touch on the SMT quarterly shift? We're already in Q1. So with the monthly BC that we have below us, will you be expecting this quarter to touch that, or how do you see that?
I don't use a whole lot of quarterly shift trading within or reading within my own interpretation of price, but I suppose there is the possibility of that. I like to just work off what's local for the most part. So if we're looking at a monthly chart, that would mean that we have three, if we're looking at quarters, so we'd have till March to reach down into there. I'd say that is a possibility. It's going to be dependent on what's occurring within February, most likely, end of January and February. Because if we trade up through the buy side and continue to see displacement up there, the likelihood of reaching back to this in the first quarter is probably pretty minimal. But if we see January and February maybe reach above and continue to consolidate in this area, then yeah, we could potentially come back down there in March or leading into March. I wouldn't rule that out. It depends. It depends on what we see in January and February. I'm not trying to really predict several months out. I'm just looking at what could possibly occur within this single monthly candle, and then working down from the weekly and the daily through there. But yeah, like I said, if we reach through the buy side and don't really see any closure through that on the monthly, and then just continue to work in this range, February and March, that's definitely a possibility coming back into there.
So for the weekly target, you're aiming that buy side, right?
Correct.
Okay.
Yep. Weekly, my expectation is to continue working up here. And your first question, when assuming this buy side is reached to, when price goes through there, I shift to a neutral bias, because I mean, you could look, I guess, at the continuous chart to see what potentially exists up here. So I use the current monthly contract for trading and for looking at what's likely to occur, because you see different inefficiencies than you'd see on the continuous chart. So you really don't want to be using this chart. But since we can't see anything beyond 2023 on the current monthly contract, you could look to this to see what exists up there. So if we continue to keep working higher, then of course you'd have the high end of this SIBI, which you can see back here. I'm going to remove these. So that candle's low to that candle's high. You could reach up into there, and then you have relative equal highs up here as well. So that could kind of tilt the hand to you as well, Mauricio, as to what may happen in this quarter. We're in such close proximity to the buy side up here that if we do see any sort of displacement through this high, the likelihood is that we'd continue reaching up toward here. But when we do purge, just have to look at just like what we saw this week, right? When we came down for this retracement, I want to see what's occurring toward the beginning of the week to give an idea of where price may continue to go. So just like we saw the displacement and the trading through premium arrays right in here, to expect price to work back higher, when buy side is purged above here, you'd want to see what's happening on Monday, Tuesday, Wednesday of that week. Is it just kind of chopping around, coming back below the high, and potentially creating some new SIBIs to the downside? Then maybe you work back down into this area. If you see new BISIs being created through the high on the daily and weekly chart, and potentially even down to the 4-hour, I'd expect price to continue working up toward the high end of the SIBI here, and then toward the buy side. Does that make sense?
Yes, sir. Thank you.
Cool. Yeah, no worries. Any other questions here on NASDAQ? All good. Sweet. And we'll go
Not too shabby. We'll go into trading exercises. Alrighty. Training exercises. Can you? Oh, also, I was looking into the WEF annual meetings. Those are the World Economic Forum meetings that every year the World Economic Forum gets together for a whole week and has meetings. So there will definitely be volatility throughout that. Okay. With regards to the training exercise, I will go ahead and get into it. First one is mine, and I can go after everything. I can go back in the charts and kind of show you guys everything that I was looking at. But really the framework of it was CPI was unable to purge higher time frame buy-side liquidity, and we had shifted intermediate structure in a bearish stance with relative equal lows sitting in and around 47.86. The 9 a.m. hourly candle also had an immediate rebalance and rejected that rejection block, which was the CPI following. Price action was showing respect to SIBIs as well as inverting BISIs to use them as resistance. So that's what as I see that behavior and I see those signatures in price, I want to just try to find what fits me to hop onto that. Biggest thing for me was waiting for that macro time window, like obviously it was told in here, right? You had to stay within, your entry had to be within either the 950 to 1010 macro or the 1050 to 1110 macro. So my point of interest, obviously, that I was more so aiming for was 47.86, which was really, in theory, the January 10th 1:50 a.m. low. You can use the 5-minute, 15-minute, 1 hour, but it was that low that I was really looking at. The context target was, oops, this is supposed to be a Q, but the context of my target was that we had relative equal lows between, obviously, this low, but then the day that I was trading on January 11th, we also had created a low right in that same vicinity at 1010. So utilizing that with the idea that those in essence was creating relative equal lows, that was the context behind my target. The setup was really simple. It's just a on January 11th, which was the day that I traded at 10:19, there was 1 minute BISI that was formed. So I'm using that BISI as inversion when the macro hits. I went 2 contracts short 1 minute into the 1050 macro. So at 1051, I utilized 2 contracts going short. My stop placement was above the 10:49 a.m. immediate rebalance on the 1 minute. It was 56 minutes. I took partials at 47.86 and a quarter. Wanted to hold for a extension standard deviation target. Didn't get it. That's okay. I had 0.3 risk. 3-to-1 RR, was able to get a little under 1% on that. My emotions for the trade, it was the first trade of the year for me, so the first time I'm pressing the buttons. Emotions were mostly level. I focused more on trying to identify PD arrays and validating against me to therefore trail my stop tighter, which led to my second exit coming in close to the low of the day. If I wouldn't have trailed my stop so tight, I would have lost profit on the trade. Emotions were slim to none. I said known. I'll go back and fix that. It was my first trade of the year for me regarding pressing buttons, so it felt good to get back into the groove. Honestly, I had to fight the idea of trading the PM session a little bit just because it felt so good to be back in the markets. And then if you look at here, you can see, obviously, I'm waiting for that macro to come in, right? You have this 1 minute BISI right here. You can see price breaks through it right there, comes back. You can see I kind of shows respect there, but then really just pulling up here. I did get a little slippage. I didn't get the entry I wanted, but still just getting in on this candle. You can see price close through now this BISI. Now, as I tape read, I'm following price to see if it inverts that, and we kind of go through. You finally see displacement. Stop stays above here. So if you look right here, this was an immediate rebalance. So really just my stop is on the high of the candle that inverted this BISI, right? Very tight stop. But I also had lower risk on the trade than normal, and that's okay. And once we finally displaced through this low and I took a partial, my stop then goes from here to here. And then from there, once price starts to kind of break through this low, again, I move my stop here, because in reality, I do not want price. If price is going to look at what's the time, right? It's in and around that lunch hour 11:50 macro. So price has an opportunity to potentially just retrace back up into the morning range. And if that's the case, I need to understand what PD arrays I can trail it behind. And because this was such a larger displacement and my stop is right here, that's a big portion of the trade that I don't want to give up. And so once price actually starts to close back below these lows right here, I'm moving my stop at this high and identifying this as an order block and understanding, well, okay, if price doesn't validate that, it could fill this whole SIBI, and if not the whole, morning range. So that was my second exit just from trailing my stop. And this price action right here ended up being the low of the day. So I'm okay with it. I'm happy with it, right? sometimes it'll go lower, and that's okay. But the time was the key to my thing. Is I didn't have time for price to just let price continue to trade. I don't like being in the lunch hour. I don't like, sitting through trades during the lunch hour. I don't like trading the lunch hour really in general. And so time was really my main essence. And if I'm going to try to squeeze, right, the idea is to squeeze as much juice out of that trade as possible. And that was my best case scenario was, okay, well, price is either going to hold this high and continue to go lower and hit, it was probably a 20 handle, 20, 30 handle, terminus with regards to one contract. I had already taken the other one, but it didn't. And I'm perfectly fine with that because you can see that right when this got invalidated, right, that was also a shift in market structure and price ended up going back, right? So I would have given up a decent amount of handles out of what I was wanting in the trade just by trying to hold my trade or hold my stop loss a little higher. So I was happy with, taking the profit where it was right as soon as that was invalidated. Because you can see that once that got taken, everything kind of shifted and changed and went higher. Alrighty, Miss Kate. Bias was bullish. Narrative, we opened inside a 4-hour BISI created by yesterday's super bullish action. I was looking to see if we could hold the 4-hour BISI for continuation up, but by 10 a.m., the latest 4-hour candle had closed above the BISI consequent encroachment. We had 3 drives down to the BISI low and started to get bought up. Finally, there was SMT near the 4-hour BISI lows with YM and ES. All of these factors led me to believe we could go higher. So as you can see on a higher time frame, right, this is what she's identifying. On a 15-minute, she's identifying this as a breaker. Price is pushing up into it. Here's the SMT. You're inside a 4-hour BISI. Right, and she's got levels up here, right? Openings, standard deviations that she's targeting inside these relative equal highs. Trade idea, my idea was that we could use a lower time frame PD array to get in on the long in anticipation of the formation of the 15-minute breaker. There was a 1-minute inverted fair value gap that I was eyeing and wanting to use as my entry. Before this being the first trade on the first head trading account, I got a little too excited prior to entry, although my original plan was to enter at the consequent encroachment of the implied fair value gap. I saw that there was a 1-minute breaker near it and pulled the trigger near the top of the breaker. I added a second toward the bottom 25% of it, but I allowed my stop to accommodate price to go as low as the bottom of the inverted fair value gap. I regretted my premature entries pretty much immediately, but I'm proud of the fact that I knew my invalidation point was the break of the inverted fair value gap. I didn't panic nor add a third contract to get a better average. I just let price do its thing. This is very good. If you're new, go back and read what she's talking about and try to understand what she's saying because that's very good. After, there was an area above where a bunch of higher time frame fair value gaps overlapped. So that's where I was aimed to take my contracts off. I exited my first contract at 2R and then the other one a short while later. I might have read that wrong. I exited my first contract at 2R and then the other one a short while later as price approached the higher time frame fair value gaps. Blah. Still waking up. I'm very proud of the way I held my trades. Both were longer than what I was able to do just a couple months ago. There you go. This was a similar trade to the one Henry took below, but he had superior entries and held his contracts for most of the day for a 9-hour trade. I'm happy that I was able to enter in the same general area as him, and I'm encouraged that maybe with practice, chart time, and more studying, I might one day will be able to understand the market enough to hold a trade for the entire day like he did. I like it. I guarantee you probably will. Looking into this, 12-minute trade, 2 contracts, a breaker and an inverted fair value gap. The draw on liquidity was a weekly BISI, a daily SIBI, and a 4-hour BISI. Her stop loss was below this implied or inverted fair value gap, right? You can see as price pushed up above it, we're using it. She's got both of these nested in between with the SMT. Sell side liquidity, but probably not going to take these right away since we have SMT, right? So she's understanding why that's not necessarily probable. She took one partial. You can see right here as price pushed through the buy side liquidity. And then once price entered that weekly BISI, daily SIBI, and 4-hour BISI, she took that second contract out as well. you can see that she is in fact within the 950-10-10 macro. So she's in the rule set with regards to the training exercise, and she went break even at 10.09 after price closed above the BISI. So great trade. I mean, you're a killer with these. Even though they're shorter trades, yes, over time you'll get what you'll get it, and you'll want to hold for longer, and you'll see more. But these are still awesome trades. They're don't underestimate the smaller trades and all that stuff, because in reality, and they're close in trading, or they're two close trades between yourself and Henry, but yours was in and out, right? Henry had to follow and he had to endure a lot more mental stress and capacity to follow that. Maybe his trade obviously endured more profit and he got more profit out of it, but still, obviously, like, you're in and out, great trade. It was the duration was not long. Stop loss was perfect placement. Moving it to break even, great. It's just, over time, what you want out of the trade is not what you want out of a trade today, is not what you might not want out of a trade later down the road. So, I mean, I like it. Henry, if you have anything, you can talk on it. And then honestly, if you want, you can share your screen and talk over yours, because I can see that you guys were going back and forth here, because I know you guys have relative equal ones.
I left a comment for Kate, and Axel had a similar idea to work off of as well. But yeah, there's nothing wrong with that trade, and I'd like to touch on this too. I don't know if I said it in my comment here, but I think on a past one of your exercises, I might have said, okay, if this trade is something that you can find consistently just between your entry and where you took profit, that's enough to have a wonderful career in trading. You never have to hold longer than that. I mean, if you could just find something, and this goes for everyone, if you can just find one thing that repeats in the markets day after day after day, you don't have to have a huge portion of the daily range to be profitable and to make a career in this.
The
All you
RR
have
is
to have
there.
is something that repeats. Yeah.
Even
if you're taking one-to-one trades, I mean, the risk reward doesn't really matter that much, right? If you're taking one-to-ones and you win more than half of your trades, you're a profitable trader. So there's no shame in this, and I think you had a really great trade here.
Yeah.
The only thing to touch on in terms of technicals, and what I mentioned in the commentary, was that when we're looking at, and this is kind of how I go over price action when we're talking about the weekly breakdowns, is you have to, it's important to follow price action from the highest time frame down to the lowest, because every one of the lower time frames must be in context with the higher time frames, and a time frame above the one that you're on is superior to that time frame. So like if you're trading off of a 1 minute chart, for example, like Kate's trade here, when price reaches, and this might even help for me to screen share. So
Sure, you can screen share.
what day was this trade from?
This trade it's a good question. I know she uploaded it.
I think it was Tuesday.
Yeah, it was Tuesday.
Tuesday. Okay, great. So
Here,
I'll go
you can
into, or
screen
actually,
share.
I could just show.
Because I wanted you to go over. I wanted you to go over your trade too.
Yeah, I'll do that.
Good trade though, Kate.
Just touch on it there.
And
Yeah, excellent.
You can go over Axel's too while you're there too.
Okay, I'll do that. All right, so okay, let me break this down. I'll put on my all right. So unfortunately, I have a lot of things marked here that kind of clog up the screen. But if we go down to a 1 minute chart, let's see. All right. So this is right where you had your entry K2. Awesome entry with the inversion SIBI and this little BISI right here. I took the same trade there with you. And then I took one pyramid entry on top of it using a 30-second chart in here. But
sorry to interrupt. Just a quick question. The SMT with ES, what
yeah,
do you see there? That the
ES,
ES was doing a
ES made
higher
a
high?
lower.
I
ES
was
made a lower low.
a lower low. Okay.
And NASDAQ made. So I think, Sarah, you were mentioning this as well. This is what an SMT would be. So we're in a point of interest where we expect price to move higher from. ES here, if we look at if you look on ES's chart on Tuesday morning between the 845 lows and the 945 lows, you'll see ES made a lower low here where NASDAQ makes a higher low. So ES traded down here below this low and NASDAQ did not. Correct. That's bullish. And if I were choosing one to trade, I would want to trade the one that made the higher low, NASDAQ.
Okay.
So I'll touch on my trade in a second, but this is what I wanted to point out first was if you're trading off of a 1-minute chart, for example, when price trades down to an inefficiency where you take your entry, like right here, I'll even take off the drawing so there's less distraction. See how we have this BISI right here and the inversion right there? So this high to this low, you have an inefficiency right there. And price trades down to it right here. If you expect price to continue working higher off of that, you'd expect it to trade up toward the buy side up here, just like what we saw on the weekly charts on ES and NASDAQ. So we trade down to the inefficiency and then continue to work up toward the buy side right here. As soon as buy side is reached above here, this is now out of context on the 1-minute chart. And so this target has been reached up here. If you want to continue to be in this trade through a longer price run, you now need to move up higher in time frames to see what exists within this price run, because this is now out of context. And what I mean by that is the context of the, here, let me put on, I'm going to hide these things a second. Group it. There we go. So the 1-minute context would be this. You have a BISI right here, and your context would be price trading up to this high right there. So that could be your trade on the 1-minute. If you want to continue to see this trade play out further, then you have to go up to a higher time frame to see what now exists within this price run for price to work higher. Because once this is purged up here, new inefficiencies could potentially have been created within this price run that price can return back into. And so you have to allow for price to make that retracement, right? Like if price is coming all the way up here after trading through the context, you have these inefficiencies and you can look on your higher time frames up, your 5-minute, your 15-minute, and see what new inefficiencies have been created as well. Because let's say you see this BISI now created up here and price trades back into that and you expect it to move higher. Well, it's now out of context on the 1-minute chart because we already had the point of context reached right here. So if you enter a trade right here and put your stop loss down here, the likelihood is that the trade's going to fail right there because there's now a higher time frame inefficiency that exists below. So if I'll use the replay tool right here so we can see what happens. And if I go to a 5-minute chart, you can now see that there is, I'll even go to a 15 actually. In that price run from that low up through the context high, a new BISI was created right here on the 15-minute chart. So if I go to 1-minute, you can see that that was created inside this price run. And so if you try and trade this one, this fails because it's returning to a higher time frame inefficiency, which is reached right here. And then what happens after that's reached? Price continues to work higher off of that. See right there. So that one fails, come back into the higher time frame one, and then continue to work higher off of there. So the way to approach this is when you're looking to be in a trade for a larger range like this, as soon as your context from the time frame that you're trading off of is reached, then you can go to a higher time frame and build new context around that. So here, the 1 minute reaches up toward there. We see that a new 15-minute BISI was created in here. So I can go to a 15-minute chart and see what do we have here. I'm going to take that off a second. And you can see we have the 15-minute BISI right there. Price trades into that. You also have a breaker right there. And then if you look on a 5-minute chart, I'll go to a 5-minute even. So you could work from your 1 minute up to your 5-minute, up to your 15-minute, and you'll see how it's how you can read it all the same way and you're getting new context. So here on the 5-minute, we have a low right here, high, a lower low, and this would be your breaker here. So you'll be able to see it better on a lower time frame, like a 3 or a 2-minute, but this would be your breaker. It aligns with the inefficiency right here, and you can see how price trades nicely back into there and then continues working higher. On the 15-minute, you could have new context here. So here's the inefficiency on the 15-minute, and then the next high for it to reach to would be here. So you could take a trade from here up to here. And if price is going to continue working higher, you can reach above these highs. What I want to touch on too is you can start with, I like to start with the context of the trade, like the point of interest that I'm trading off of. So here, it's the 4-hour BISI right here. This is where the trade was initiated. So Monday's price action trades higher, just like we talked about, trading through all those premium arrays and creating new BISIs, new discount arrays. Price trades into this. My expectation is that it will move from here in the New York AM session, so that timing is important, up to the buy side above here. So now I have the larger context of the trade. So on the 4-hour, my expectation is that I'm looking at this just like as if it's a 1-minute chart. Imagine this is a trade you're taking on a 1-minute chart from here up to here. Of course, we go down into the lower time frames, but your expectation can be that price will move from here up to the buy side right there. And so now we have the full context of the trade, and I can enter on a lower time frame in here and take price all the way up toward the target, which is right here. And if we go to the 15-minute, oh, go ahead.
One clarifying question, Ranjan, here. Like while you're looking at that H4 charts, why wouldn't you anticipate that, the price can come to the OTE or the lower H4 BISI that was created? And why it would, in the New York session, it will go from the premium of that range itself, and you take a long position in a premium of that move from the prior day.
So what we're seeing here on the daily chart is that we already got closure back up through here. So
Yes.
I'm now expecting this area to work as the inversion or balance price range for me. So I don't really want price to come back to the low of this down there. So then I go to a 4-hour chart and I see I don't really want it coming all the way back down here. And you can see here as well, we have this 4-hour which we traded through.
Where was your stop there?
Where was my stop in here? My stop isn't based off the 4-hour chart. My stop is based off the the 1 minute. So I'll touch on that in just a minute. But here we're trading down in the just ahead of the New York session into the midpoint of the 4 hour, also the inversion of this 4 hour right here. And then we get the SMT, which we saw ahead of the New York session. So ES making the lower low and NASDAQ making the higher low. And so that kind of initiates the trade idea that price can work from this point and doesn't need to come back down into this area down here, because this has already been traded on the sell side and the buy side. There's no reason for it to come back down into here.
Got it.
Does that make sense? Mm-hmm. And so then we can look for an opportunity, and you see other things that can kind of tilt the hand to you as well. Like when you see this candle come down in here, it reaches to the midpoint of the 4 hour BISI, and then the candle closes in the upper half. And then the next candle drops to right about the consequent encroachment and then makes the run off of there. So here on the 15-minute, I'm going to clear some of these up. But you can see this is the 4 hour context. So we're expecting price to trade from inside of here up to here. And so I can take my 1 minute trade and trade it up to here. Then the 1 minute's out of context. But I can look to the higher time frames and see what is still available for me to trade on. So now I go up to the 15-minute chart, and you can see that you have your breaker, right? Your low, your high, your lower low, and it's traded through. So this is your breaker right there. It's in line with this BISI right there. So you can expect that to be a nice, strong BISI for price to trade off of. You have the relative equal highs up here. And so now imagine this as a 1 minute chart that you're trading off of. If you were going to take a trade in here off the breaker or off the BISI, where would your stop loss have to be? It would need to at least be under the breaker, under the BISI, and so probably down here. At least below the midpoint of this wick down here. And so if you're
How many points are those?
For that trade, if you
Yeah.
took that trade, you could manage it like
More than
this.
20?
The stop loss is 34.5 and your target is 93.5. If you took that trade on a 15-minute. And try not to concern yourself with the number of points, right? Because you can always adjust your size to account for that. Right? Like you don't, if you're trading a mini with 10 handles risk, then you could trade 3 micros with 30 handles risk, and it'd be relatively the same risk for you. Because if you imagine this as a 1 minute chart, now price can trade off of here and off of here and shouldn't need to come back below here to work up toward the buy side up here.
So that's basically 3 PDA rates that will be violated: the fair value gap, the breaker, and the consequent encroachment of that 15-minute wick.
Correct. So let's say if this is the 15-minute that we're trading off of here, our stop loss needs to be right down here. And so if I go back into the 1 minute, this just shows about stop management. How if you want to stay in the trade longer, your stop needs to reflect the higher time frame context. And so you can take the 1 minute trade right here and take it up through this high or even up through these highs right here. But then you have the new inefficiency. This is the 15-minute breaker. This is the 15-minute BISI right there. And so if you rush your stop loss up into here or into here, expecting this BISI here to trade higher off of, you're going to end up getting stopped out before the trade continues to work. And so that's why partials are so important. You take your partials through here, and then you can let a part of the trade run off the higher time frame without jamming your stop loss up there. So at this point, if you're taking an entry down in here, you can leave your stop loss here or move your stop loss just to break even, but no further than that, because you want to allow the 15-minute time frame to trade off of. And then after that works up away from here and creates a new imbalance, then you can move your stop loss up to here. And so that's pretty much what I was looking at in my trade here. I'm gonna take
Henry, if you go back to the 15-minute,
sure.
The 3 candles that you show there, which cause the BISI on formation on the 15, shouldn't the stop be below the candle 1 instead of the candle 2 that you have taken?
If that's more comfortable for the way you trade, you can absolutely do that. You can put it here. I typically, depending on the structure, kind of like if I have a BISI combined with a down close candle, let me find a good example.
Mm-hmm.
Typically, I put the stop under the second candle.
Okay.
So if I were taking this trade long right here, my stop loss would go under this candle right there. If I were trading something like this, like if I were buying a BISI in here, since we have it in confluence with the order block, I would put my stop just under the order block. Let me have
Got it.
see if there's a better example. Yeah, like something like this. If I was buying in that, see how we have it in confluence with the order block right here.
Mm-hmm.
And see where the low end of the candle is. Like if I were putting this would normally be the second candle where I could put my stop under there. But if price trades down into that, it could just be trading down into the order block because we have the opening price and the mean threshold that are both in confluence with the low end. So I don't want my stop right there. I'd want my stop down here where it would be protected. But if there's no reason for it to trade down below the second candle, like if price is going to trade from here all the way down to here, I don't want to be in that trade anymore because it's probably going to keep trading to here.
Right. Many times in my trades, I've noticed I've been wigged out and then price goes in the anticipation of my direction. So I have to really work on my stop loss management.
Yeah, I think something that can help you a lot with that is actually trading off of these higher time frames, because you just get a better context of what's occurring, and start by using wider stops as well. So you could take a trade like this and size your position so that you can put your stop loss all the way under this low right there, and then you don't have to be concerned with getting stopped out of the position, because if you're going to get stopped out, the trade is definitely wrong if it's going to come all the way under this low. So you just size your position really small, and then you can reach for a higher target and you can still have a really nice trade off of that. And you just size your position so you're comfortable with the risk.
Yeah.
It always makes sense, in my view, to have the stop loss that you're comfortable with should always be, the risk on the trade should always be more important to you than what you can profit on the trade. The risk always needs to come first. And so if you are worried about the stop loss getting hit, give yourself a wide stop loss, reduce your size on the position so that it can account for the wider stop loss, and then you can still have a nice trade. So you could take this trade from here and put your stop all the way down there, and you're still getting over a 1-to-1. So that's totally fine.
Henry, quick question. What do you think about
Yeah.
with that same example? Just go on
15.
micros and say, okay, my first entry, my stop loss will be here, but let's just say that I'm gonna build out this position in case that it goes against me, and my signing the line is that swing low that you just mentioned, and you start like adding 1, 1, 1 up to, let's say, 5 or whatever, and then obviously if it goes below that, then your trade is completely done. Instead of going only one on one NQ, you know what I'm saying? So like you build a position from there all the way down if it continue going down, and then obviously we're done. Or that's not a good like trading behavior.
You could do something like that. I don't think it's necessarily the best behavior, because you want to have an area identified where you'd expect price to turn from, and then allow for it to move a bit further than that, right? Like I put my stop loss down here with the expectation that price is going to trade into this inefficiency and then work higher. I'm not expecting that it's going to trade all the way down to just above my stop loss and then trade higher. The stop is just down here to allow for, if we see a larger wick or manipulation to occur, it can do a mohawk past the inefficiency and into the wick right here. That's why the stop loss is down here. And so you could, if you wanted to build into a position, you could say, okay, I'm going to buy some at the high end, I'll buy some at the consequent encroachment, and then I'll buy some at the low end or just past the low end if it's a little bit of a mohawk. But you don't want to be buying here and then buying more right above your stop loss, assuming that the stop isn't going to be hit. You want to build your position where it makes sense to. Does that make sense?
Okay, yes.
Yeah. All right.
I
I
have
think I
one more
might.
question if you have time, Henry.
Yeah, go ahead, Ismail.
Let's say obviously you got in at the unicorn entry between the fair value gap and the breaker. Don't you consider this all before we break out and actually break structure into the upside on 15-minute? Do you look at this as a balanced price range? All this wicks high, up, down, and up again. So if you really want to manage like a really tight stop, you can put it below the 50% of this balanced price range or the inversion of this wick.
Yeah, I think so. If you wanted the stop to be tighter, you could put it below the midpoint of this wick. You could likely even put it below these two up close candles right here. But I think when you're learning and trying to understand price action, the easiest thing is just going to be to have a simple process for where you put your stop loss. So that can be if I'm trading a inefficiency like this, I'm going to put my stop under the second candle, let's say. So just naturally, you know to put your stop loss right there. But yeah, absolutely. If you have this trading up and down like that, and then up and down through here, you could view this as that balanced price range. And then your stop could be below the midpoint of this wick, or potentially even be below this as the breaker. So there's ways to refine it for sure. All right, I think I covered mostly what I wanted to talk about here. I might have got a little bit off track, but pretty much as you can see, you got to follow the context up the time frames. So like if we look here on a 15-minute, then when this 15-minute trades from, I'm going to remove the breaker so it's easier to see, from this inefficiency up to the high right here, then now the 15-minute has reached its context high right there. And so now as this continues to trade, I can't just, if I want to stay in this trade, I need to go up to a higher time frame and see what's happening there. So I can go to an hourly. And now on the hourly, we can see that a new inefficiency has been created right here in line with the mitigation block right here. So here you have a high, a higher low, and then it trades through here. So this is your mitigation block in line with the inefficiency right here. So now I'm looking at this as the area for price to continue working higher off of. And you can see how that happens right there. So if you wanted to continue holding this trade that you took from the lower time frame down here, your stop loss can't be up in here. It needs to allow for the higher time frame context. So your stop needs to be at least down below here. So this inefficiency can trade in the mitigation block right here. And you can see how that trades, and then you continue to work up higher. So pretty much the point is here that if your intention is to hold a trade for a larger price run, you just need to be conscious of the time frame that you're trading off of and what is developing on time frames above that. Because as you trade through a high and continue to work higher, new inefficiencies are going to be created behind price, and you have to allow for retracements to happen into those inefficiencies. So let me take these off a second, and I can show you how my stop was trailed on this trade. I think I got a bit off track in going through this, but Kate, great job on your trade. I think you took a really great trade. And hopefully some of this helps a little bit, and then we'll get into Axel's trade. So I'm looking at this on the 1 minute. Wish it would just go right back to it. But here we go. Entry was in here, in this BISI, and with the inversion right there. And then right here, when price trades through here, it creates a new 30-second BISI. So I took a pyramid entry inside there, right there. So I took 15 right here, and then 5 right there. This is the micro. I trade the micro instead of the mini, so that I can have plenty of opportunity to scale out of the position and hold more for higher prices. If I traded the mini out, I only would have been able to take 1 or 2 contracts here, but instead I was able to take 20 on the micro. Stop is under here. So this is what I was talking about before, Ranjan. So I have the BISI right here. If I put my stop loss under the second candle, I'd get stopped out, but it's in confluence with the order block here. So my stop goes under the order block right there.
Got it.
Trade higher off of there. Then you can see how I have my stop managed here. So I don't move my stop to break even on this trade until the daily SIBI was reached up here. So I was allowing this to trade through here. Then my stop can go to break even. But note how it doesn't go up here. It only goes to break even right there because I'm allowing the 15-minute BISI to trade. So price trades up to here. Then I go to break even. Then it returns to the BISI right here. Now I'm watching this on a 15-minute chart for the higher time frame context. I see the breaker, the 15-minute BISI, price trades off of there, comes back down to 1 minute order block, moves higher off of there. Then after I took my first partial up here at buy side liquidity above that high, then my stop loss moved to right here under this low, because now any inefficiency that exists in here, I want to allow price the opportunity to retrace into that and continue working higher. So then stop trail to hourly BISI high after the highs were purged. So after these highs were purged up here and above the buy side right here, then I go to an hourly chart because new inefficiencies could exist here on the hourly chart. And now I'm trailing my stop below the hourly inefficiency right here. Right here. So after this trades up there through the buy side, then my stop is trailed to here. I'm not trailing it off lower time frames up in here because this can trade back down into there and then continue working higher. So stop only goes to here. And then after 130, and I hope this is valuable and not going on too long here, but we go through the buy side, stop gets trailed up below the hourly BISI, and then after 130, where we make the drop down and then continue working up here, at that point my stop goes below the hourly mitigation block, which we talked about here, because I don't want to see it trade below that at that point. And so this would have been a great place to take a partial right here. My target on this trade was actually only about like 10 or 15 handles beyond this. So it didn't quite reach to my terminus up there, and then it came off. And I just ended up holding the position till the close of the day, and I just closed it after the day closed because I wasn't going to hold it overnight. But you see how you have to use that time frames above to trail your stop if you want to hold for a larger range, because you need to allow for price to make these deep retracements into higher time frame inefficiencies. But that pretty much covers that. Let me grab Axel's trade. Let's see. Any questions on that? Okay, cool. All right, good. I'm glad that helped. Opened up a new way of managing stop loss. Great. Glad that helped. Okay. Then we'll go into Axel's. I think it's the last one that we have in here. I hope you see the recording, Axel. I think you had to leave, but that's all right. Okay, Axel said, first trade of the week. I realized my mental capital isn't as sturdy as end of last year. Haven't had the greatest time mentally, and I could definitely feel it during the trade in what culminated to an early exit where I wasn't willing to hold for terminus and through the ebb and flow of the market. Maybe it was partially the feeling of being in a position during the least precise time of the year, as well as it being a Monday with no news drivers. Regardless, I'm happy with how price behaved overall and with my results. Good confidence booster to start off the year, to say the least. My logic for the trade was pretty simple. Using Sunday's clear breakdown of the market from Carson and Henry, I had a clear expectation to an if this, then that scenario. We traded through the new day opening gap above the 15-minute SIBI turn support and back into a 1-minute BISI entry. Trade duration was 1 hour. Terminus hit 2 hours after entry. So here's Axel's trade. You can see here we're inside the macro from 950 to 1010. There's the BISI right there. And it looks like Axel was looking at this as a breakaway gap, expecting price to not trade into there. So stop loss was placed just under the lows right here. Close, but that's algorithmic right there. Looking at this as a breakaway gap, no need to trade in there. And continuing to work off higher. So first target was here, it looks like. And then the second target was here. Great first exit. I like that a lot. In line with the standard deviations right there. And then this is just what we were talking about before. And I left this in the comments here, Axel. I think you had a chance to look at it too. But this is the same idea, right? So if you're looking for this trade to continue to the higher, for a larger range, you have to look at those higher time frames and see what exists below here. So when price trades back below this low, we don't necessarily see it as a shift in market structure. Instead, it's just returning below the low to go into a higher time frame inefficiency that's been created. So if you look here on your 5 and 15-minute chart, you can all look at this on your ES chart from Monday of this past week. Look here on a 5 and 15-minute chart and see where this occurred on the 1 minute. Do you see the new BISI that was created here? And price is just drawing below this low to trade into that inefficiency and then continue working up higher. So you can see here on the next one, price ends up drawing into there in the inefficiency and then continues working up toward the buy side and toward the targets up here. But overall, I think you managed this trade really well, Axel. Nothing wrong with trailing your stop up if you're expecting this to make that run right there and just getting closing out the rest of your position in profit. Really nicely done. Let's see what you said here. Wanted to take 37% off at 2 standard deviations. Okay, so you had some internet issue there. And then in the end, I decided extra profit wasn't worth the mental capital on a Monday, so I got out right before getting taken out, regardless, no stress. Yeah, so that's fine too. You know, you have to manage a trade based off what makes it worth it for you. Sometimes it isn't worth it to sit in a trade for another 2 hours to get another 3 or 4 handles out of it. Sometimes it's better to just take your exit and call it a day when you're in profit. So I think you managed this really well overall. And yeah, great trade. Any points on that, Carson?
No, I'm good there. I would have done the same thing too. Honestly, as I've gotten more into my trading, I value the time, honestly, a little bit more than the profit. Like what's waiting in the trade for 2 hours if I'm going to get 5 more handles out of it on 1 more contract? Like it's value your time a lot more. Getting what you want out of the market, more importantly, when you want it, is more important than just trying to give yourself to the market for the entire day in hopes that you get a couple extra more dollars on some extra handles. But I'm all good there. Henry, if you want, you can just carry over into the this week's training exercise.
Okay, cool. Oh, Axel, I do see you're in here. I lost your icon for a second, but if you wanted to say anything about this, you can too. Otherwise, I think
Yeah, no, you
it's
had it
all
pretty much
from-
right. I agree with what you said. I just didn't have the mental capital, the mental capacity to deal with looking through and waiting on higher PD arrays to be respected and whatnot. I said I already took 75% off of the trade already. I don't really want to keep following price action right now, so I'll just get out. Yeah, you are right. You are right in relation to the context.
The self-awareness there is key though too. Like just
Yeah.
even being aware that you don't have the mental capital to deal with it at that moment in time is like should be like eye-opening that like you were able to be aware, because some people don't know. They're like, I don't know how much mental capital I have. I'm just going to go, and they just burn themselves out. But being aware towards it and understanding, like, you know what, I don't want to deal with this trade for the rest of the day. I already got 75% of the trade. I'm gonna trail it here. If it stops me out, great. I'm fine. I can walk away, do whatever. But I think that's a bigger win than it may seem, of just being as self-aware as you need to be to understand, all right, I don't have it. Because there's going to be some days where you're like, no, I have it. I'm going to follow this. I'm going to follow it. I can do it. I have the mental capital. I'll let my stop breathe. I can do it. That's up. And then there's going to be days where just don't have it.
yeah, well done, Axel.
Yep, that's exactly it. Like I have the same goal as Henry for this year. So I want to be able to get in on a lower time frame PD array and then just follow it going higher and higher on the time frames, you know, and holding for as long as humanly possible. But that was just not the day for me.
That's great that you're able to recognize that and adjust for that. There's no reason to sit in a trade if you're not feeling it, because when you stay in something when you're not mentally prepared for it, then you're exposing yourself to the opportunity to make emotional decisions, and that's not where you want to be in your trading. So if you don't feel like you've got it in the day, then you're absolutely doing the right thing to close out your trade or just trail a stop up and
Yeah,
take your
and
stop
I've
and
done
profit.
that a lot in the last year. Like at the beginning of last year, around January all up to the middle of the year, I wasn't that aware. So I would get into positions and I would start to hold, even though I don't realize that I'm actually burnt out at this point, and then it would just bite me in the ass. So I
Yeah,
I
it
learned a
happens.
little bit about that. I'm still
Good,
not there perfectly, but I can feel it a lot better.
good. Well, you should be proud of that progress. That's great, Axel. Okay. Exercise 18. Carson, you want to go over it or you want me to read it through?
I can do it. So Monday's a U.S. bank holiday. That day is off limits for trading. And really just the idea behind this week's assignments is to identify that opposing liquidity pool that's supposed to be taken prior to your trade, right? This helps with so many things, both, you know, psychologically and obviously technically and probability based on your trading. So identifying that, we want you to obviously just use your model. Use whatever model you want that you're used to or that you're trying to build up towards, that you've been, you know, back testing this out or the other. But the main thing is identifying, and odds are, you know, it's always in front of you, but really identifying, you know, what was that clear clear pool of opposing liquidity that was taken prior to you getting in, right? Main thing is prior to you getting in. So for example, if you're bullish and you want to go long, identify at least one low, but you can obviously, the more the better, but identify a low that has been taken prior to you entering the market. Or if you're bearish, identify a high that has been taken before entering the market. This should be on a time frame between, it could be a 1 minute low, it could be all the way up to a daily low or high. And obviously the more highs and lows identified, the better. The account balances should be rolled over from last week's exercise. Obviously calculate the contract size. Really just the main goal is to identify that opposing liquidity pool that's being taken prior to you getting in, right? Opposing, right? So if you're pressing that buy button, you want a low to be taken prior, right? What's that low? Is it a 1 minute, 5 minute, 15 minute, 1 hour, 4 hour, daily? What does that look like? Is it a weekly? I guess I could have added to the weekly. It can really be any time frame, but identifying in that close proximity of where you're entering in that trade, what opposing liquidity is being taken, right? Because that's going to help your trade, right? If you're wanting price to go higher, you need a low to be taken. If you want price to go lower, you want a high to be taken. So identifying that is really just the assignment for this week. Monday is going to be off limits, obviously, because you have the bank holiday, but all other days and times are open. So you know, that's wide for you. Really, this week was just make sure that you can try to identify what opposing liquidity is being taken prior to you getting in the trade. Nothing crazy. It's just it's more so, you know, odds are sometimes this is almost in all your trades, all your winning and good trades that you have. But sometimes you don't really see it. Sometimes it's not apparent to you. And this is something that's key to try to understand and follow. It's one of the main things that I look at before entering in the trade is where's that opposing liquidity pool and has it been taken out yet? That's it.
Okay, sweet. And then this is the second week, so now you should have some activity on your account. So
Oh yeah, you can change that.
Oh,
or
okay.
add.
We'll have to we'll update this
yeah.
in here. But basically, if you're in profit on your account from the first week of activity, you're gonna, no matter what, you're keeping your account balance the same as last week, right? Whether you're in profit or drawdown. If you're currently in profit, you can risk 0.5% on your first trade. And if you go break even or lose that first trade, you can risk 0.25%, 2 trades max for the week. And then if you're starting in a bit of drawdown this week, then you'll want to, for your first trade, just risk 0.25%, not 0.5%. And we'll update this so you can go in and look at it. We'd love to see your participation on these exercises if you're new to the group. I know
It will help you.
Can really vouch for the progress they've made through it. If you just go into community forum right here on the website, and then go to training exercises right here, that's how you access them. And you can go in there and just give it a read through, set up your paper trading account on TradingView. So you're trading with a demo account, no real risk to you, and then you want to put your submission in here. And we're really happy to go through these and provide feedback, and it can be super beneficial to you to get some outside perspective on your trading and to be able to be vulnerable in this space and talk about things that are you're potentially struggling with in your trading. Those are the kind of things we can help you work through. So please do take the opportunity.
It cannot hurt. It cannot hurt. It is impossible for it to hurt you. There's nothing here that can hurt you. It is so good for you. If you do not know what you're doing right or what you're doing wrong, or if you don't know if maybe there's things that you can be doing better, or maybe you're doing exactly what you need to be doing with regards to actually doing the mud work of trading, which is getting in, pressing the button, managing stop loss, taking partials. If you don't know where you're at with regards to can you do more? Are you doing exactly what you need to do? Are you way out of the picture? You don't know until you try. So please try getting used to doing these exercises. We're early in the year. I really hope that you guys aren't really pressing the idea of just trading live like you're in the middle of the year. This is the perfect opportunity and perfect time to try these things. It takes 2 seconds to open up a demo account on TradingView, and you will get so much value out of it. I appreciate the ones that do it. And honestly, I have fun doing it. It's not, It takes 2 seconds to start an account and do it. It's really easy, and honestly, I like it. The only times I don't like it is when I'm just super focused and oriented with my live trading, and when that happens, and there's weeks where that happens, I just don't take a trade. I'm too busy trading live. But when I want to be more of just laid back or casual, or maybe I've already traded enough for the week and I've won what I wanted to or lost what I needed to, and I don't want to press anything more on a live account, and let's say there's 3 more days in the week, I can utilize something like this. So don't be shy. Don't be scared. It's very good for you. It's meant to help you and grow you as a trader.
Yep, right on. I see your message too, Cengiz. No worries about that. Life comes up. Yeah, if y'all are having a week where it doesn't make sense for you to trade, or you don't see anything, of course, these exercises aren't meant for you to force something either. So they're meant for you to continue to develop your self-awareness as well. Like, maybe this isn't a week for me to participate, and you can still go in here in the trade exercise and say that. Make a comment and say, I had to step away from the market this week, or I wasn't feeling there emotionally. That's a wonderful thing to say, because you're recognizing that you weren't in a place to do that, and you're building the habit of being self-aware in that way. So in the future, when you're in a position where maybe you shouldn't trade this week and you're trading your live accounts, let's say, you can understand that for yourself and say, okay, I'm not going to trade this week. I'm going to go do something else with my time. So either way, whether you're trading or not, share your experience in here, and it's a great way for you to continue to learn.
Good stuff. Good stuff.
Yeah, really, really well done, everyone, this week. I think
that's it really for me. That's about it. I gotta go find me some calories to eat, but if anyone,
can you show?
Yes.
Yeah,
I can do it. I can do it. Yeah. All right. So when you are on TradingView, when you are here, can you see my screen?
Yeah.
All good.
Oh, show too that you can create a second paper trading account if you're using one for something else.
So this is the one that I use. Obviously, you can see I've had one trade, or these are my 2 trades, right? This was my first right here, second right here. You can see the history, but really to reset it, you can go to account settings, or actually you can just click reset account. I'm not going to click it, obviously, but you could just click that little gearbox next to your account on the paper trading. Just click reset account, and then when you click that, it'll give you odds are whatever you were at, or you can change the amount. And then obviously you can come in here, and I have a couple test accounts here too when I'm just testing stuff, but you can obviously create multiple paper trading accounts as well. So if you want to create multiple accounts, you can just click on this account, little drop down right here, create as many as you want, name them as you want. And then obviously if you want to reset it, you can reset it right here. Hopefully that answered your question.
Axel says, I didn't know you could have 2. I've been using this one for practice for a larger account. Yeah, that's a great tool, is to be able to set up multiple. So if you want, you can make one for the training exercises, and then make one for just testing models and whatever else you're potentially working on.
Yeah. Okay. Well, that's it for me. Anyone have anything else before I go and find some food?
Any
All good?
questions? Okay. All right. I guess we're good. Well, you can always reach us if you need. Send us a message on the website, or
we do have things coming out in the works.
social.
I cannot say too much, but we do have a lot of things coming out in the pipelines. I will get smacked in the head if I say anything else, but do expect some new news coming in the works in the pipelines in the next couple of weeks. I don't have any deadlines or dates yet, but we do have a lot of cool stuff coming your way. I promise.
All right. Well, that'll close it out for the week. Take care.
Bye, guys.
We
will see you guys on Wednesday for the midweek review.
I'll see you then.